Hello and welcome to another edition of BCR Webcasting. Today I'm joined by Richard Olver, who's the Chief Operating Officer of Bibby Financial Services. And Richard is going to be talking at our forthcoming UK Invoice Finance and ABL Summit, which will be on the 27th and 28th of February in London. And you can get all the information about that on our website, which is at www.bcrpub.com. Richard, welcome. Richard, the panel that you're on at the summit is about the future of invoice finance and redefining an industry with data-driven innovation. Data, technology, data driving, these are all very, very topical subjects at our events. And, it's almost difficult to have a panel where something along these lines is not mentioned in some way. But in this panel, we're focusing quite a lot on it. I mean, what sort of changes have you seen within invoice finance, within ID and factoring, in terms of the rise in popularity of data-driven models?
I think the timing, new technology presents new opportunities. And the way we address certain challenges we have, we've got things like data scanning and document scanning, OCR. We've used that in contract space. You've got things now with data coming in or voice recognition and create the data. You can do sentiment analysis. I think the ones in the most recent time you've seen and that are coming into models are the things around the extraction technologies for financial data. So the ability to upload from cloud-based financial packages. You've seen a number of businesses, and we've been using a number of these organizations for some considerable time. You've also got, obviously, the emerging and continued growth of kind of open banking. And we have Marion King as one of our non-exec directors who chairs one of the open banking government forums. And what we have to do is we have to convince and bring on board our clients, because these things, obviously, in certain areas of the market are faced with a touch of reticence. Are they giving over elements? So there's a huge opportunity for us to improve the customer experience by utilizing the tools with a customer lens. If you improve the customer lens, you also improve our position.
Richard, the extraction technology, that's been around for quite a long time now. Is there anything sort of new happening in that space?
Yeah, I think a number of the vendors we've all talked about a shadow ledger product for some time, where we can map the assets and the cash movements. If you combine not just the AR, so the accounts receivable extraction, but if you can take the package, a number of the technologies now can look at the whole of the accounting package. And if you can marry that with the banking data, you have a very powerful means of getting to a validated set of numbers that create a borrowing base for your client. And also it speeds up that speed to cash, it speeds up that cash collection and allocation process. So you've got real-time, real quality data. Now, this is evolving. Some people have taken steps and done more of it. Some people have done other elements. But, it is a product that a number of companies are currently working on in a combination of partnerships. And again, I think it will sit somewhere within that kind of between factoring and ID, because again, maybe need a degree of sophistication and certain clients will buy it. And you've seen with the fintech emergence, a number of them have championed and developed these technologies. And as I think I've said in previous conversations with people, the SME is also, he has or she has got an expectation with what they see in their retail finance, because it's so close to their their business world at the smaller end of the market. So I think if we get the what's in it for me question answered in the right way, where we can illustrate, the benefits of these technologies, they have been around, but they're evolving in their use. And as you put them together, you're coming up with propositions that are more driven by what the client needs. Maybe they've been erred towards what maybe the funder needs.
And just in the same vein, the more recent technologies and the providers that you're partnering with, which are offering things like APIs and open accounting, those kind of collaborations that you have with technology providers, is there any of those that stand out particularly as being more effective than others?
The consumption of the APIs is kind of like the facilitator of that data flow. As you get into the use of cloud-based computing and what you get from AWS, Azure, or whoever, some of the providers are a little slower to provide them. Some build them specifically for you, but the need is ever increasing. So you are finding yourself talking to the providers. Guys and girls who are starting from scratch are obviously building them in. The legacy providers are on that journey. And as they develop them, they're ever increasing their capabilities. We do have, in a specialist space, obviously a smaller number of providers who have a limited budget around what they have their investment. So a lot of it's driven by us, the consumer, the lender driving that development. And it's universal. So they're all working on it. And there are some really good things around, being able to consume data from public reference agencies. Now, everybody's pulling data from, Companies House or the like, what you're doing with the credit reference agencies and their data provision via API. It has speeded things up because it's very easy to consume. And it's growing constantly. And this is us also developing our own technologies so that we also can be very easily integrated into other spaces. We have a number of partnerships that we've built on open ecosystems where that two-way traffic has come out. And even things like in our asset finance business, our sister company, building online portals that are API enabled for people to engage with. So not only are we consuming, we're also constructing.
Are there any particular sort of challenges in getting into these sort of marketplaces and ecosystems that you've discovered in your
I think
journey
so.
here?
I mean, what are you trying to solve for? A lot of it is around distribution of services or allied services. For us, a lot of what it has been that reciprocal marketing, whereby there may be a marketplace, maybe it's an invoice provision, it might be a payment services provision, it might be an FX provision, as we have in house. It's about that cross-selling. It's about the ability for our clients to consume that partner's data or that partner's product, but also to make our product available. There has to be a mutuality to that relationship or something that's going to create for you stickiness in your clients. So when you investigate them, we've had a number of false starts because the balance wasn't right. We have a very large kind of database that is quite valuable. People would like to market to it, but the way in which it's constructed, we can't. And however, if those clients want to consume a service, we could introduce them. But at the same time, that reciprocal is we may be into a point where they don't provide any form of invoice finance, and that reciprocation goes on. So they sound easy to do, but you need to ensure that there is that classic win-win, one for you, the partners, and the client that you're dealing with. Because if there isn't, that imbalance soon becomes evident.
No. And in terms of adopting new technologies, Are there any advantages or disadvantages over, say, banks having to go down this journey or this road? You're a larger independent, well, the largest, I think, in Europe, I'm guessing. Is that right? Largest
In Europe, in the UK, yes. Europe would be a debate with one or two of our colleagues. I think we're
okay.
not far off, I don't think.
All right, but you're a very large independent provider. So in terms of the ability to adopt these new technologies, how does that differ from, say, the small independent providers and also the banks? These all, different animals, aren't
Yeah, I think it's relative. One thing that happens when the banks and those with, say, for want of a better word, deeper pockets invest, they do tend to democratize the ability of a product to go to market because a vendor will absorb that investment into their application and then it'll be available for others to consume. So part of it becomes a point of following rather than being maybe an early adopter or an innovator in that. Like everybody else and the banks, they all have finite investment resources. And again, you focus on what you're going to invest in and why for your own reasons. One would hope that we were faster, that we could innovate. We recently launched a cash flow product in the UK, which we developed, built, and launched in very short order, which was a testament to that teamwork. But those bigger structural changes, the adoption of AI, we've got the same regulatory and ethical issues that we've got to deal with as the bank. So I would say you become a follower rather than that. But those smaller guys and girls, they can innovate. And there are so many really good smaller vendors out there at the moment, and they're proliferating because the technology is emerging all the time. And those providers need use cases because that creates the ability to sell. So I think the playing field is what you're trying to solve for. And a lot of it is if you've got client-facing elements, it's about looking at the pain points that clients have, speed to cash, ease of use. Now that drives for you cost efficiency, better customer experience. And those are the areas where you find that potentially some of the bigger market spend may go to the banks. But you're also now seeing this in some of the big, even if you took your Microsoft packages now, you've got elements of Copilot that are going to be packaged in the deal. So there are ways in which you can get access to those technologies. And there are some really, really inventive people in our industry who've just got some really bright sparks who build stuff and they try it and it works. We've recently built an in-house model to kind of look at the way in which our clients are tried. And it was just test and learn, see how it worked. And it's just opened up a whole heap of other work that we're doing in some of the work we're doing with AI, some of the work we're doing in cash management, so auto allocation, logic to allocate, searching lots of unstructured data and turning that into structured data. So you would always argue that you would think there's an imbalance, but I think the bigger investment does democratize the technology for the rest of us. And where you've got investment, you target it to your own needs.
So it sounds to me like there's some pretty interesting times ahead for the sector, whether you're a bank, whether you're a small independent, or whether you're a large independent like yourselves, with this new technology coming in and what this new technology can do with data. And of course, Bibby has a long and well-deserved reputation for innovation. So I think this panel, Richard, is very, very appropriate for you. And we look forward to hearing more from you and your fellow panelists who have their own views on this subject, of course. And just to remind everybody, This is at the UK Invoice Finance and ABL Summit, which is on the 27th and 28th of February in London. And you can get the program and more information at www.bcrpub.com. Richard, thanks very much for your time today, and we look forward to seeing you at the summit in a few weeks. Thank you.
Thank you, Michael. See you soon.